Welcome to the deep dive.
Great to be here.
Today, we're taking a look under the hood at Healwell AI, that's ticker AADX.
Right.
We're using some data points from early 2025 and, comparing it with Teladoc Health Inc., TDOC.
hmm
The idea is really to get a handle on the key financial differences and maybe the potential paths for these two in the healthcare tech space.
Exactly. We want to pull out let's say, the crucial insights from things like market cap, revenue, profitability, cash flow, assets, liabilities, ownership, all that stuff.
Without getting totally bogged down in the numbers.
Precisely. Just the story the numbers tell.
Okay, let's kick off with market capitalization. Wow, the difference is pretty stark right away.
It really is.
Healwell AI, at the latest point we have here, is sitting around, what, $1.3 billion market cap?
Yeah, about that.
But what also jumps out are these, well, pretty big swings in their market cap just across these few dates in early 2025. We're talking hundreds of millions in fluctuation. And Teladoc obviously just operates on a much bigger scale in terms of total value.
Right. And those swings for Healwell AI, that kind of volatility isn't super unusual for a smaller company.
Especially in this sector.
Yeah, especially in a dynamic area like AI healthcare. A big piece of news, maybe a trial result, or just market mood swings can really move the needle much more than for a giant like Teladoc.
That makes sense. Okay, so revenue per share then. Teladoc seems to pull in more revenue for each share compared to Healwell AI.
It does.
Is that just about size again, or is there more to it?
Well, size is part of it, sure.
Yeah.
Higher revenue per share often points to a more, let's say, mature business, wider service adoption maybe.
Okay.
For Healwell AI, that lower number could mean they're, still earlier in their growth curve,
Yeah.
maybe focusing more on user base expansion rather than maximizing revenue per user just yet.
Got it. All right, let's talk profitability. EBITDA and operating income. This is interesting. Healwell AI shows less negative numbers here.
Compared to Teladoc's more negative figures.
Yeah, which might seem a bit surprising given Teladoc is so much bigger. What's the story there, do you think?
Well, neither is profitable by these metrics, right? But Healwell's smaller losses could suggest maybe tighter expense management, or they might just be closer to breaking even on operations. Or, on the flip side, Teladoc's larger negative numbers might reflect, really heavy investment, scaling up, R&D, new services. That costs money.
Right, investing for future growth. But then free cash flow, the actual cash generated after expenses and investments, flips the script.
It does. Big difference here.
Healwell AI is negative, but Teladoc is positive. That feels pretty significant.
Oh, it is. Positive free cash flow gives Teladoc options, real flexibility.
Like what?
Reinvesting, maybe looking at acquisitions, paying down debt, strengthening the balance sheet. Healwell's negative cash flow means they likely need to focus on improving cash generation or maybe finding more funding.
Okay. Shifting over to the balance sheet assets and liabilities. Healwell has lower liabilities, but also fewer assets.
Compared to Teladoc, which has higher liabilities but also, naturally, a much larger asset base.
And we also see Healwell's book value per share and total cash per share figures here. What do those add?
Lower liabilities for Healwell can mean lower risk, which is good, but you have to see it next to their smaller asset pile.
Right, context matters.
Exactly. Teladoc's bigger balance sheet just reflects their scale. Book value and cash per share for Healwell give you a sense of the sort of tangible net worth behind each share.
Okay, and one last piece, ownership structure. Healwell has a lower free float, around 82%.
Meaning about 17.6% of shares are closely held, maybe by insiders or major investors.
Whereas Teladoc is almost entirely free float, like 98% publicly traded, only about 2% closely held. Does that difference matter much?
It can. A lower free float, like Healwell's, can sometimes mean more stock price volatility.
Why is that?
Simply fewer shares available for trading day to day. So big buy or sell orders can have a bigger impact on the price.
Gotcha. So, okay, let's try to wrap this up. We've got Healwell AI, smaller, more volatile market cap, maybe better profitability trends on paper, but burning cash.
Right, negative free cash flow.
Against the giant Teladoc, positive free cash flow, much larger scale, but with currently larger operating losses.
Yeah, it paints a picture of two companies in quite different financial spots, likely different priorities right now.
One possibly focused on reaching profitability soon, managing costs.
while the other leverages its size and positive cash flow, maybe for more aggressive expansion of market share plays.
Exactly. Which brings us to a final thought for you, the listener. Considering these pretty distinct financial snapshots, what fundamentally different growth strategies and maybe different risk appetites might a company like Healwell AI be pursuing compared to a major player like Teladoc, especially in this, fast-moving world of AI in healthcare?
Yeah, something to chew on.
Definitely something to think about as you watch these companies and the sector. Thanks for diving in depth with us today.